This is The Gist, the essential podcast for the discerning listener.
Hello, everyone. Welcome back to The Gist. I'm John.
And I'm Mary. We're here to help you cut through the noise with a clear, power-focused look at the day's biggest stories.
Today, we're tracking the big squeeze, shadow banking, global trade, and the true cost of security.
Let's dive in. The Gist View.
Mary, the headlines are screaming about a 12.5% tariff on 60 economies, including the European Union and United Kingdom. It feels like a trade war, but if we look at the incentives, it's not really a fight. It's a structural redesign.
Exactly. When the U.S. weaponizes forced labor allegations, they aren't just making a moral statement. They are forcing global supply chains to decouple. Think of it as a forced restructuring of the global factory floor.
And look at the money. In the shadow banking world, specifically the $1.5 trillion private credit market, the walls are closing in. Blackstone's flagship fund saw 10% of its value requested for withdrawal. Why? Because institutional investors are scared.
They see the tariffs. They see the geopolitical instability, like the deadlock in the Lebanon ceasefire. And they want cash. They are exiting positions because the cost of capital is shifting.
It's a classic move. When governments turn trade policy into a weapon for economic sovereignty, the safe places to park money disappear. Investors aren't playing for growth right now. They are playing for the exit. The global overview.
Moving to the markets. John, we're seeing a paradox. Despite the chaos, the IPO fever, that's the rush to take companies public, is back.
It's true. Anthropic, SpaceX, even 140-year-old silver mines are lining up to list. Goldman Sachs CEO David Solomon says this is good for the United States. Think of this as the chase mentality. When capital is abundant, investors stop looking for safety and start hunting for scale.
But there's a rot in the foundation. Look at KPMG. They're dealing with a massive whistleblower fallout in Australia. Leadership reportedly ignored internal warnings to protect the brand.
This isn't just an HR problem. It's an institutional integrity problem. When the firms meant to audit the truth, prioritize their own brand over accountability, they create a systemic bottleneck. Investors lose trust. And when trust drops, the cost of capital spikes.
Right. Investors demand a higher risk premium because they don't believe the numbers anymore. It makes the whole game more expensive.
And what about energy?
The Fed just released research showing that United States energy independence has changed everything. Since the 1970s, oil price shocks used to wreck the United States economy. Now, we are much more resilient. United States domestic production acts as a buffer. It's a big shift in how we handle global commodity volatility. The European Union European perspective.
Crossing the Atlantic. Mary, the trade situation in Europe is getting transactional.
It is. United States trade officials are confirming that those tariffs on European exports are sticking. The message to European firms is clear. Market access isn't a permanent right. It's a variable. You have to pay for it through alignment with U.S. industrial policy.
Which puts European companies in a bind. They're weighing the cost of swallowing tariff hits against the need to keep trade flowing.
And speaking of awkward alignments, look at Albania. Jared Kushner's investment firm is backing a luxury resort project there. It's caused massive protests in Tirana.
It's framed as an environmental issue. But the real story is the commodification of state assets. When leaders like Prime Minister Edi Rama trade land for foreign capital, they invite a volatility premium. The social cost of these deals is starting to outweigh the economic gain.
Finally, Germany. They are facing a brutal math problem. Nursing care reforms are projecting a massive multi-billion euro deficit by 2027.
It's the funding gap nightmare. An aging population needs more care, but the tax base is shrinking. They're proposing to shift the burden to the childless. It's a desperate attempt to keep the social contract from collapsing.
It's not just a German issue. It's the reality of a continent where the math of retirement and healthcare is no longer adding up.
So, what's the temperature today?
High volatility, higher stakes. Capital is fleeing from audit-heady sectors and rushing into mega IPO hype. Governments are using trade as a leverage tool, and Europe is struggling to balance budgets against demographic realities.
It's a world where business as usual is officially off the table. Thanks for listening to The Gist.
We'll see you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.